So hello and welcome to everybody out there in YouTube land. Glad to have you with us today. I'm Michael Carr, realtor out here in East Texas in the Longview area, and I'd like to say thank you for viewing and hope you get some good things out of this. Today I've got a guest. I've got Aaron Nakamura with us, and he is with Encompass Lending, and he's going to be going over some thoughts and ideas on his standpoint of what's going on today with today's market. Is today actually a good day for, or should we be shying away from it, and just kind of what's going on out there? PowerPoint presentation that he's going to be sharing with us. And with that, at this point, I'll go ahead and hand it on over to Aaron. And so, Aaron, will you share with us a little bit here with our guests out here on YouTube or wherever they might be viewing from, I guess? What do you see from a lender's point of perspective? And go ahead and tell us a little bit about yourself, I guess, to start with here, if you would, please.
All right. Thanks a lot, Michael. Appreciate it. Great introduction. I'm Aaron Nakamura. I'm with Encompass Lending. I've been a mortgage officer since 1987. I will always try and give you the best advice, give you all of the options available to you. Whether they're good for me doesn't really matter. I always try and give you options and advice that's going to be best for you. So let me share my screen, which would be awesome. Then we can get started here. All right, so now hopefully you can see my screen here. That's my picture. Man, it looks like I got sunburned that day. Woo. But anyway, I'm with Encompass Lending. Been doing it again as you know from 1987, and I'll be happy to help you. Let's see here. Next one. Our mission statement sounds pretty weird, but it is true. We try to make the dream of home ownership a reality through concierge customer service, accountable actions, and a can-do attitude. So what that means is we're not your cookie cutter 9 to 5 Monday through Friday bank or mortgage company. I take calls every night until 10 o'clock, weekdays, weekends, doesn't really matter. That's because you need to talk to, or you have questions, you're going to have them at 8, 9 o'clock at night. After, you work during the day, you don't want to be talking personal stuff during the day, so that's fine. Come home, de-stress, eat dinner, play with the kids, put the kids to sleep. All right, now it's adult time, 8, 9 o'clock. That's when you're going to need me, and that's when I'm available. As far as accountable actions, I'll always give you the best advice I can. If I make a mistake, I will own up to it. I am not perfect. There was one guy that was perfect, and not everybody liked him either. So, and as far as can do, I will do everything in my power to make what you want to do get done. So, as far as today's market conditions, I don't think it's a surprise to anybody. The majority of buyers are waiting to buy, waiting for interest rates to go down. And we'll discuss why that may be a good or not so good idea. Because there's less buyers out there, sellers aren't having as many offers, so they're willing to negotiate. Whether it's the price or help pay closing costs or 2-1 buy downs. I mean, there's a lot of things that the sellers can do to help a buyer. And yes, we do have higher interest rates, hoping that we bounced off the top and trending downwards. And I know a lot of people are saying, well, I'm going to wait for the rates to drop, then the prices are going to drop. Well, I'm not exactly sure that's going to happen, only because we have such low inventory. And you all know supply and demand, right? If there's a big demand and a small supply, then the cost of that commodity goes up. Well, the demand is the buyers, the supply is the inventory, and so we don't have very many buyers, but we also don't have very many properties. And so because that's kind of in balance, you're not seeing prices drop. So that's kind of what the current market is. And again, I don't think that's a big surprise for most of us here. So what's the forecast? Well, last year at this time, most economists said today, November 23rd, November 2023, we would already be in the sixes, not near the eights that we are now. So what's caused that? We've had a lot stronger employment sector. Unemployment has come down, or has stayed down rather, has not gone up very fast. We've had strong consumer spending, whether it's all the savings that people had from the COVID days, but we've also had an increase in government debt. So that's all of those things have kept rates higher for longer. However, right now, consumer delinquency is on the rise as far as credit card, car loans. Not quite yet for mortgages, but consumer debt has been going up, which all of the economists are saying, well, everybody that had savings blew through it, and now they're maxing out their credit cards. And as soon as that happens, well, they're not going to be able to make those payments, whether it's because they don't have the money or they get laid off. But the economy is going to slow because it's no longer being fueled by consumer demand. And all of these indicators, the slowing of the economy, as well as many traditional recession indicators, all predict that we will have a slower economy and possibly a recession in the near future. So most economists are now projecting that rates will be in the upper to mid sixes in the next 18 to 24 months, sooner if we have a recession. But they're also stating that due to low inventory, home prices will probably not drop but continue to rise slowly. Home appreciation is one of the ways that they're backing up this theory. I mean, as slow as it's been in 2023, as you can see, we're on pace to do 5 to 10% in home appreciation. All of these times that you would think prices would have dropped, houses would have got cheaper. In fact, they're continuing to slowly go higher and higher. So how does that affect you, right? Well, I can guarantee rates will do one of three things. It's either going to go up, it's going to stay unchanged, or it's going to go down, right? So if you buy now, what makes a good decision for you? Well, if rates go up instead of down, then you bought a house with a lower interest rate than if you waited, right? Rates went up, you bought before, so now the rate you have is lower than the rates available in the future. If rates stay unchanged, well, doesn't really matter. Mortgage payment didn't change, rate didn't change. However, with the growing appreciation, you probably paid a higher price if you waited than if you bought today, because home prices are still appreciating. So the biggest question, what happens if rates go down? Well, all the buyers on the sidelines are going to flood back into the market. Competition will be fierce. So if you wait, the first thing that goes in a seller's market versus a buyer's market, buyers are going to have to start paying sellers' closing costs in order to try and get their offer accepted. In addition to that, you may have to pay over the list price to, win the bid to buy the house. So if you already purchased a house today, well, then you would have been able to negotiate price, you negotiate closing cost credits, if any, and you would be able to see the appreciation grow faster now that it's a seller's market, because all of these other buyers are pushing your value higher and higher as they keep bidding higher and higher to win houses. And the good part is rates are down, so now you can refinance and lower your payment. So one thing you cannot do is you cannot go back and change the price of the house when you buy it. However, you can change the interest rate of the mortgage that you're paying. So that may be a good reason why you may want to buy now while the market is relatively calm and there's not so much competition, even though rates are high. So that's how rates can be your friend. Are you ready to buy? Well, the first thing you need to do is get pre-approved. We find out what kind of income you have, credit scores, how much money do you need. I think the big question is, how do I know when is a good time for me to buy? And I think Mike, you'll be able to chime in here. Rates appreciation in Texas is normally low and slow. We're not like California and Florida where you see a $500,000 swing from last year to this year, up or down. We continue normally on a nice slow pace, 3 to 5% historically, and it just appreciates slowly. So when is the best time to buy? Is when you're ready, when you can afford the mortgage payment, when you have down payment, when you have the need, whether you just got married and you want to start buy a house, you have had another child and you need a bigger house, you just moved to Texas because this is where the jobs are. When you are ready, that's the best time for you to buy. To me, the sooner the better, because of our low and slow appreciation. The sooner you buy, the quicker you get equity. You build equity and build value. So that's kind of my take on it. Just my opinion. So right now, again, with higher rates, you have leverage as a buyer, right? We went over this before. Sellers are willing to negotiate because there's less buyers, less offers, lower price, build better value, and build equity faster. If interest rates drop, buyers normally pay seller's cost, so that means less cost for you to buy now. Closing costs, now sellers might help you buy that, and you can pay discount points to lower your rate, lower your payment, and they may even contribute to a 2-1 buy down. That will lower your monthly payment for a temporary period. So for that, first-time home buyers, FHA loan is kind of the original first-time home buyer program. It is lowest down payment, 3.5%, the most flexible underwriting guidelines, but it does have tighter appraisal guidelines. We do have a special program right now for conventional. It's 1% down. The lender kicks in the grant for 2%, so it is actually a 97% loan. It's a lower interest rate because this program does not have any adjustments. So if you are buying a $200,000 house versus a $500,000 house on a normal conventional loan, there's adjustments for loan amount. The higher you go, the cheaper it is. Same with credit score. If you have a lower credit score, then you pay more. This loan does not have any of those adjustments. So you qualify as far as the rate and the cost as if you have 740 credit scores and a $400,000, $500,000 loan. Even though you're maybe at 680 and your loan amount is 200. It doesn't matter. This program also has no PMI. Because it's conventional, the appraisal guidelines are a little bit more lenient, but it does have income limitations. In the Dallas-Fort Worth area, it's about $82,400 a year. That can change, so get with me and we'll look up where you're at or where you're looking to buy and see what those limitations are. And because it's conventional, the underwriting guidelines are can be a little bit tighter as they have lower racial requirements. There is down payment assistance still available. It's normally given out as a 3-year forgivable second lien. So let's say you get, $12,000 in down payment assistance. It gets recorded as a second lien against your property, but there is no payments, there's no interest. After 3 years, it is forgiven. So what that means is before the 3 years is up, if you sell or refinance, you have to pay back that money. And that also has income limitations, but it is not as strict as the conventional guidelines. And on the down payment assistance, you can go FHA, VA, or conventional. There are some grant money where it's just free money, but it is for FHA only. That's kind of all I got. Do you have any questions? Please give me a call. So back to you, Michael. What did you get out of that? Anything that I missed? Anything you want to expand on?
Well, actually, I've got a couple of thoughts and comments there that I actually did take a few notes on, a couple of
All
key
right.
point type things. So one, for those people who are out there looking, this is still a seller's market at this point. Is that correct in what I understood? I mean, it's
I
like,
think it's more neutral, more of a neutral market, neither a buyer nor a seller's market, because you do have properties that are still getting multiple offers, but you also have properties that are sitting for 30, 60, 90 days. So it's a little bit more balanced.
okay,
I think in a buyer's market, you would see the large price drops because you have so many more properties and not enough buyers. To me, that's a buyer's market. A neutral market is kind of where we're at now. And then a seller's market, when interest rates drop, is where you're going to have, a ton of buyers and a handful of properties. If you remember a couple of years ago, there was people putting in 10, 15, 20 offers before getting an offer accepted. That's a seller's market.
okay, yeah, I remember those days. I actually had a friend I know that she put, I think it's like 7 different offers on different homes over the course of like 6 or 8 months. And I think she finally ended up doing a personal loan or something from her dad and ended up having to put like $50,000 over the asking price to be able to get
That's definitely a seller's market.
a home there. But it's still, and your thoughts, it's a great time to buy, and I just depending upon your perspective and your personal abilities. Is that right?
Yeah. So I mean, the right time to buy is one. Obviously you're going to need a house. Whether you rent or own is your choice. If you rent, it's 100% interest. So, 7 plus interest rate is a lot better than 100. The question to me really is, are you ready? Do you have the down payment fund? Are you going to get the funds gifted to you from your parents or relatives? Can you afford the payment for the house you want? Right? All of those things seems like common sense, but a lot of times, people don't think about it. They just say, "Oh yeah, I want to buy a house. I want that house because it looks good. It has 3, 4, or 5 bedrooms, whatever you need." But when you look at the cost and your income, it's not gonna happen. It's you don't have the cash or the down payment or the closing cost or the income to qualify for something for that. And that can be a great disillusionment, and we don't want to do that. So that's why you get a first before you get started, before you fall in with a house you can't buy, get pre-approved. Give me a call. It's a pretty simple process. We get you approved, pre-approved. You send me documents. paycheck stubs, bank statements, W-2s, stuff like that, so that I can base my pre-approval on real numbers, not just what you say you make. The biggest problem a lot of times is with self-employed people. Well, I make, my company grosses 100,000 a month. Yeah, but you got 995,000 in expenses. That means you net out $5,000 a month. Not 100. So we do have guidelines that we evaluate income, whether it's self-employed or hourly salary. And then we get the documents. That way, when you put in an offer, the seller knows you're serious. You've been checked out, your credit's good, your ratios are good, you have enough money. And if they accept your offer, they're going to close. So a
Right.
lot of times, you cannot put in an offer with Michael if you don't have a pre-approval letter. Sellers just won't accept it.
Right. And actually, that was my next and final comment, was going to be, if they think they want to make a purchase or want to start looking for a home, or in the process even with somebody else or something, even perhaps, are not in the Dallas area where they can't necessarily work with me, they could still possibly work with you. However, they still need to go through that pre-approval process to know what they can qualify for, what they really can't get into perhaps, and figure out what their options would be at that point. So it's just a matter of, really making sure that they find their lender. Hopefully it's, somebody great like Aaron here, and, get your loan through him and come out and talk to me and get your home out here in my neck of the woods and out in East Texas in the Longview area. And, we'll, between the two of us, hopefully get somebody in a nice home. Right?
Yep. And here's another, throw this out there. This may sound weird, but now may also be a great time to refinance. And it's not for everybody, true. In order for you to refinance to a higher rate, obviously there's got to be reasons. One may be cash flow on a monthly basis. So maybe your mortgage payment is $2,500 a month, but you've got $800 car payment. Maybe you got two of them. And you got credit cards that are, near the limit, and maybe not very much in savings. So instead of just having a $2,500 mortgage payment, we look at, okay, you got $2,500 mortgage payment, $1,600 in auto loans, maybe another $1,000 in credit cards, and very minimal in the bank. Well, if you have equity in your house, this may be a great time for what we call as a cash flow refinance. It is a cash out refinance because we will pay off your mortgage, we'll pay off your two cars, we'll pay off your credit cards, as long as we have sufficient equity. And your new mortgage payment may be, $3,300. Okay, it went up $800, but you're actually saving $1,800 on a monthly cash flow basis, because 2,500 plus one car was 33 already. Then you had another car at $800 and credit card bills of 1,000. Okay, so now you're not paying that. And if there's enough equity, we could, give you money to put in a savings account for, just in case, your rainy day fund. If the recession does appear and you have a need for rainy day funds, well, now you have all your credit cards available to you and you have cash in the bank. So, something to ride the recession out and come out on it smelling like a rose on the other side. So, it's not for everybody, but it may be a lifesaver to some.
That's an interesting thought. Hadn't actually thought of that, but I guess, even with that in mind, even with the not so wonderful rates that we do have, it could be something that, works out, really pretty well for certain people. Of course, one of the things I guess you got to really be careful of if you do something like that is not to go and get yourself in further high debt with,
Don't charge your credit cards back to the max again.
right, no,
That's
no,
normally the biggest mistake.
right, no, not another new car or something like that.
Correct.
So, yeah, well, very good. Well, Aaron, I certainly appreciate your time, and hopefully we'll be able to get together and do some more of these in the future and come up with some other things. I know that you and I have talked about some ideas, and I'm looking forward to talking with you again. And I thank you for your time, sir.
Thank you so much for having me on. We have a lot of specific programs that we could go over next time.
Right.
It does hit different markets, different range of people. But maybe we could go more in depth into, what is an FHA loan, or, stay tuned, watch Michael's videos, and see if give us a little bit of encouragement on what you want to hear, what you want to learn about, and put that down in the comments. Appreciate it.
Definitely. Thank you very much, Aaron. You have a great day,
All
and we'll
right.
be talking to you again soon. I have no doubt, sir.
All right. Thanks again for having me, brother.
You're welcome.